Redemption of debenture. So there are two ways: redeemable debenture, irredeemable debenture. 1 minus 0.30 is 0.70 divided by 85.5 into 100. It works out 9.82 percentage. 14 lakh 28,100 divided by 90 lakh into 100. It works out 15.87 percentage. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Grade College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Corporate Financial Management 5th semester Unit 1 Session 2 in favor of BBA regarding the cost of capital of the first chapter, where I am going to solve the second problem with the detail. So here the question goes on: Advanced Corporate Financial Management of Cost of Capital. I will go through the problem now. What is agenda? Cost of capital. We are going to solve weighted average cost of capital, WACC. Redemption of debenture. So there are two ways: redeemable debenture, irredeemable debenture. Irredeemable means to say that debenture will not be paid off till the lifetime. Redeemable debenture means the debenture will be paid off after stipulated time. Formula: irredeemable debenture KD is to Y into 1 minus T divided by pre-issue price minus issue expenses. This is the price of the share minus issue expenses into 100. Then this is a problem. X Limited issue 12% debenture after 100 each at a discount of 5%. The issue expenses amount 10% of the issue price. Tax is 30%. Calculate the cost of debenture. I. This is interest, face value, interest rate 100 into 12 by 100 is 12 rupee. Now come back to P. The market price of the share, face value minus discount minus issue expense. Out of what's your face value? 100 rupees. This is your face value. Then minus discount 5% on 100 is 5 rupees. It comes to 95. On the 10% is 9.5. It works out 85.5. The tax rate is 30%. KD is I into 1 minus T divided by market price into 100. 12 into 1 minus 0.30 divided by 85.5 into 100. 12. 1 minus 0.30 is 0.70 divided by 85.5 into 100. It works out 9.82 percentage. So this is without this is irredeemable debt. Then we'll go to redemption of debenture at par. I into 1 minus T, redeemable value minus net value divided by N, whole divided by redeemable value plus net value divided by 2 into 100. Your net value is face value minus issue expenses. Here 9% is there, 49. I is equal to 49.5. If the net value is 10% deducted, that we already done here. See that? This is 11,000, 5 lakh 30, 11,000, that should be deducted here. So 5 lakh 50 out of net value, if we deduct 11,000, it becomes 5 lakh 39,000 divided by 10, divided by 5 lakh 50,000 plus 5 lakh 39,000 divided by 2 into 100. Simplify. 49 into 1.6, 11,000 divided by 10, 5 lakh 50 plus 5 lakh 39,000 divided by 2. It works out 29,700. This is 1,100 divided by 5 lakh 44. If we add and divide, it comes to 5 lakh 44,500 into 100. It works out 5.6%. 2% issue expense. Deduct 5 lakh 39,000. 49,500 into 1 minus 5, 11,000 divided by 10 into 100, 5 lakh 50 plus 5 lakh 39 divided by 2, 29,700 plus 1,100 divided by 5 lakh 44. It works out 5.6 percentage. Now, redemption at a discount of 5%. 5 lakh 50 minus 27,500. 5 lakh 22, 2 by 100 expenses, 10,450. 5 lakh 50. This is your issue expenses. 5 lakh 50 face value, 27,500 minus 10,000. It works out 5 lakh 12,050. So 49,500 into 1 minus t is 0.60. 5 lakh 22,500 minus 5 lakh 12, that is 5 lakh 22,500 minus 5 lakh 12,050 divided by 10 whole divided by 5 lakh 22,500 plus 5 lakh 12,050 divided by 2 into 100. If we simplify this one, no, it is 29,700. If we simplify this one, this is 1045. If you simplify this, no, it comes to 5,17,275 into 100, 5.94 percentage. At a premium, 5 lakh 50 plus 20 is added. Premium should be added. 5,77,500. 49,500 into 1.40, 5,77,500 minus 5,39,000 divided by 10, 5,77,500 plus 5,39,000 divided by 2 into 100. It comes to 29,700. If we simplify this, now it is 3,850 divided by, if add and divide 5,52 to 100, it works out 6%. Simplify this, it will work out 6%. Now we'll go to problem. Existing. Equity usually has the following structure. Equity share capital of 3 lakh into share capital of rupees 30 lakh, 6% preference share 20 lakh, then 8% debenture 40 lakh, totally 90 lakh. The market price of the company's equity share is rupees 30. It is expected that company will pay a current dividend of rupees 5 per share, which will go 20%. Forever, tax rate may be presumed at 35%. You are required to compute the following: a weighted average cost of capital based on existing capital structure, then new weighted average cost of capital. If the company raises additional of rupees 20 lakh debt at 10% debenture, this would result in increase in the expected dividend of rupees 8 and leave growth change unchanged, but the price of the share falls to rupees 15 per share. Now, weight how to calculate, no? 30 lakh divided by 90 lakh, 20 lakh divided by 90 lakh, 40 lakh divided by 90 lakh. I will show how to work out. This is existing calculation, existing 90 lakh. Cost of equity D is 5, price of the share 30, G is 20%, D dividend divided by market price of the share into 100 plus growth rate, 5 divided by 30 into 100 plus 20%, it works out 16.67 plus 20%, it works out 36.67 percentage. The cost of preference share given is 6%, same has to be retained. Regarding the cost of debt, KD, I into 1 minus T, the 8% debenture 8 into 1 minus 0.35, 0.65. 0.65 into 8 is 5.2 percentage. So this is important. Come back answer. Now multiply 30 lakh into 36.75. This is equity plus preference share 20 lakh into 6%, debt 40 lakh into 5.2, add all, totally 90 lakh. If we add all, this answer is 11 lakh, 1 lakh 20, 2 lakh 80, divided by 90 lakh into 100, it comes to 14 lakh 28,100 divided by 90 lakh into 100, it works out 15.87 percentage. So this is for existing. So if we add additional of rupees 20 lakh, it is 1 crore 10 lakh. The old one, equity, preference, old debenture plus new debenture is there. Here, debt is 8, price of the share 15, growth rate is 20. So 8 divided by 15 into 100 plus 20%, 53.33 plus 20%, 73.33 percentage. Cost of preference retained the same 6%. Old debt Already you calculated 5.2%. New debt, KD, 10 into 1 minus 0.3, 6.5%. Now multiplied. K, cost of capital, 30 lakh into 73.33 percentage plus 20 lakh into 6%, 40 lakh into old one 5.2%, new debt 20 lakh into 6.5, total already given 1 crore 10 lakh. If we multiply this now, 21 lakh 99,900, then second one 1 lakh 20,000, third one 2 lakh 8,000, fourth one 1 lakh 30,000 divided by 1 crore 10 lakh. So if you add all these things now, it comes 26 lakh 57,900 divided by 1 crore 10 lakh into 100. It works out 24.16%. This is the new equity. The one is existing plus addition. Your addition is nothing but this one. Addition. All this plus this one. You have to do for weighted average cost of capital for existing also, for the new also. What is the formula for cost of equity? Dividend divided by market price of the share into 100 plus growth rate. Then regarding the preference share, whatever the percentage is given, that should be retained. Then regarding the debt interest into 1 minus T. You have to do for old one and the new one. So what is cost of equity? Dividend divided by market price of the share into 100 plus growth rate. Regarding the preference share, whatever the percentage is come, that should be retained. Regarding the cost of debt interest into 1 minus T. So first you have to do for existing, then you have to do for new one also. I have done for both. One is for existing, one for new one also. First it goes to this, new one, old one, existing, then new one including 20 lakh, same procedure. It works out 24.16%. So definite problem from the examination point of view. For internal also, same type of problem we have asked. Hope you understand. We have solved the problem, existing also and the new also. Hope you understand what is cost of capital. Dividend divided by market price of the share into 100 plus growth rate. Regarding the preference share, same percentage has to be retained. Regarding the debt, I into 1 minus T. Debt interest into tax, that has to be. So you have to do for existing also, for the new also. Hope you understand. Have gone detailedly. Already solved about last problem also. One you have solved, another also solved, which contain the both the method. Very, very easy from the examination point. For even for your internal law. So same type of problem will be asked. So best of luck in the examination. The same type will come for 15 marks. Goodbye. Meet you in the next session.